Hello everyone, this is Sebastian McMahon from IA Financial Group. I'm back with the weekly economic review for the week ending April 11th, 2025. So what a week on the markets. We've had one of the most volatile week in recent history. On Wednesday, we had the third strongest performance on Wall Street in one day since World War II. So that gives you an idea of how volatile the week was. Now, what have we learned this week? Well, we've learned that uncertainty and volatility are here to stay for a while. This is the style of Donald Trump, to create uncertainty, trying to negotiate by making big statements. And this is what we've had this week. Now it's a 90-day pause on reciprocal tariffs. He's saying that he has a bunch of countries lined up here to kiss him not on the hand and to negotiate. We have learned that he's taking again the wrong approach with China, so taking on China head on like he's doing here. We've learned in Trump 1.0 that it's not a winning strategy, and we're reminded again, of course the world remembers, but it seems that Donald Trump had forgotten that attacking China like this. So China now has a 145% tariff on them. Everyone understood that it was 125, but the White House says it's 145, so there's an extra 20% that just appeared this week. China has retaliated by putting reciprocal tariffs of 125% on the US, calling the US approach a joke and saying that, well, now that our tariffs are so high on US products, we will ignore any other retaliation or other measures that the US puts on them, because US products now are completely unmarketable in China. So the prospects for firms like, for example, Apple, who is doing a lot of business in China, and the sales of iPhones were already down. Now it's reasonable to work with scenarios where the sales in China can drop by 50% to completely dry out. So this is the kind of environment that we're in. So it's not more certainty, it's more uncertainty that we have at the end of this week. Did Donald Trump blink in the eyes of his opponents? When you read international media, this seems to be the take that Donald Trump just showed a sign of weakness here. If you're in the US, you say, well, this is the art of the deal, and this was the great plan all along. So we're learning here that uncertainty is something that should be staying around for a while. Looking at the markets now, this week we had higher interest rates, so negative returns for bonds. This is an important topic which I want to address here. On Wednesday morning, the story in the market was that, maybe now the US could face what is called now, unfortunately for that person, but the Liz Truss moment. So based on what happened in the UK recently when they proposed a budget that was not balanced, and the bond market said, okay, we're not financing that. Rates went up pretty quickly, and there was a risk of the government having to pay higher or having difficulty to finance the deficit. And when the bond market speaks, governments listen. And on Wednesday, there seemed to have been some echoes of that, because maybe China could use their holdings of US debt, US treasuries, to put pressure on the government. So this is what happened on Wednesday morning. That was the tone of the market. But just on this thing here, the holding of bonds, just it's important to understand that China holds about $700 billion of US debt. $700 billion out of $35,000 billion of debt. So it's about 2% of the US debt that is held by China. And Japan, in fact, holds more. It holds about 3% of the US debt. It's of course it can be market moving, okay, because it's not it's not small amounts, but it's not true to that China is the banker to the US and runs the show. This is not true. But if China says, all right, I'm going to be liquidating these positions on the markets, that would mean the prices of bonds would go down, interest rates would go up, and for the next financing rounds of the US government, it would cost more to the US government to finance their new debt. So there would be some economic impacts there. And it only takes a rumor like this for every institutional manager out there, pension fund manager, to look at their holdings and say, maybe I should sell some more in front of that, and then you can get a spiral, and then rates can jump back up. So this was kind of the fear on Wednesday. And then you had Donald Trump just tweeting, but on Truth Social, saying that, it's a great time to buy. Everyone was looking at that and saying, well, this is Trump being Trump, cheerleading and using the stock market as a barometer for everything. But the fact that after that, then he announced the 90-day pause. Then, of course, there's a lot of ethical questions that need to be asked here. We do not manage based on conspiracy theories, so we'll leave that to others. But, there are some senators in the U.S. that are asking for the Department of Justice to dig into that. So let's see if something comes out of that. But, that was just some of the highlights of another crazy week in Trump 2.0. So maybe just before moving forward, I rarely do that, but maybe just some advertisement here. Of course, if you're in English Canada, you speak English, maybe you don't know about the show Tout le monde en parle in Quebec, but if you understand French, I know that was a great interview, a great platform where I was joined with the brilliant law teacher at the University of Ottawa, Geneviève Dufour, and we discussed everything about Trump, what it means for the markets, for the world. So the link is there. So if you understand French and you want to listen in, I think this was a great opportunity to share a lot of our messaging that we've been sharing in these videos over the last weeks. But it's consider it extra information. So just a publicity here. Now an update on tariffs. So on Wednesday, Trump announced a 90-day pause on reciprocal tariffs. So every country that was on that list now falls to 10%, so the baseline, except China, which is now at 145. It says 125 here, but White House after that says now it's 145. So again, where does the extra 20% come from? God knows. So this is where we are now. But even with this, the fact that China is at 145 means that the average tariff rate from that the US imposes on peers is above 30% now, which is in line with what we had in the late 1800s when there wasn't even an income tax in the US. It was mostly through tariffs that the government was getting financed. So we're back there. The reaction on the market was historical. So when you look at the charts here, chart on the left is kind of all jammed together. But if you look at the axis on the right, you'll see that between the bottom and the peak, it's 14%. That's a very busy week, and lots of action happened on Wednesday. Of course, on Thursday we gave back a good chunk of the gains on Wednesday. As I'm recording this on Friday morning, the market is kind of looking for a direction. But on the right, what you see is that on Wednesday, it was, as I mentioned earlier, the third best daily return since World War II. But look at number one and number two. It was in October 2008 when, again, we had days of like -10, +10, -10, because there was bad news, hope that there would be a solution. Nope, no solution. So we had something like this. And in 2008, 2009, we had the bear market, and the bear market bottomed in March 2009. So it's not because you have those kind of days that we're out of the woods. Bear markets are a process, and bear markets can end in the V shape. We've seen that in the pandemic is a prime example, because there was a concerted effort by fiscal and monetary policy. So the Fed and the Treasury Secretary working together, and not just in the US, everywhere around the world. Now, given that the Treasury Secretary is working with Trump on the tariffs and causing this volatility, kind of puts the Fed in a tough spot, which the Fed is going to be facing a weak economy but strong inflation. And the odds that they work something massive with the Treasury Secretary right now are rather low. So thinking that the Fed will come in and save the day, I don't think that it's a winning strategy. Bear markets are a process, and now we need to the day that it's going to be time to buy likely is going to be when we have some certainty about, all right, this is what the rules of the games will be. And starting from now, we can start to reevaluate names, reevaluate investment thesis, and maybe there are some opportunities of things that have been oversold. Are we there yet? No. When will we be there? No, we're 150 investment professionals. We manage $125 billion, and we don't know. We don't know, but what we do know is that human nature is constant through time. We do study history, and we know what the risks are, and we stay the course, and we find opportunities where they can be found. We love the fact that there's a decline in the USD that can be secular, and we're positioned for that, for example. But it's not the time to try to time the market. This is a losing strategy. Meanwhile, US data are deteriorating. I can bring many charts here, but I decided to bring the chart of the week here, which is the CEO confidence index, which has dropped like a rock. Of course, short history goes back to 2012, but if CEOs are not confident, they don't invest as much, or they delay investments altogether. They don't hire as much, or they start firing people. And of course, they keep more cash in the coffers, and they do less buybacks. And buybacks have been one of the very important drivers of the stock market over the last 10 years. So less buybacks, of course, again, as consequences. So those two, this data here has consequences on the real economy and the financial markets as well. So this is the state of the world right now. So what we'll be watching next week in Canada, we'll have CPI inflation, which is, I don't want to say relevant, but based on all of the announcements that we've had recently, how inflation behaved in March, that's not really market mover. It's more about where the puck is going. But the Bank of Canada next week has a decision. We do expect them to cut, but we are out of consensus. The consensus is giving about 65% odds that the bank stays put. We think that they will cut. We think that now we have the certainty about what we have more information about what the Trump tariff policy is. We know that Canada is avoiding the reciprocal tariffs, but we see that versus the world, it's even worse than what was expected. So if the US economy is slowing down, Canada's economy will be slowing down. If we're not facing reciprocal tariffs, that means that we don't have to retaliate as much and create inflation here. So this is less inflationary than could have been for Canada. So it opens the door for the bank to continue to cut with preemptive measures. And of course, the Canadian dollar, which is strengthening right now, this is deflationary as well. So we think these three reasons are enough to get the bank to move forward. But again, this is just our view. We are out of consensus here. In the US, retail sales, housing starts, building permits, real economic data. We'll see how things unfold. So that wraps it up for the week. Always a privilege and a pleasure to serve you. If you appreciate the content, please share, and of course, come back again next week.